please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Our market master for the day, Gautam Shah, the Associate Director and Technical Analyst at JM Financial, joins in now. Gautam, hi, good morning. We are making an attempt to recover in the market, but it's really not a conclusive attempt, still trading around that 200-day moving average. You think it could be taken out, and what's the prognosis now over the next, say, 3 to 6 months?
Well, Sonia, the last 1.5 months have been quite challenging. You know, in a sense, it was a sort of a reality check after the kind of run-up that the Nifty saw in the whole year of 2017. And I think this was much required because the fact that we did not even go with the 5% correction the whole of last year just created a little bit of bubble or a froth in the system. And that has got rationalized, or that has got corrected with this 10% drop from the top. The problem is, even at levels of 10,000, 10,100, you don't have evidences on the charts to say that the market is bottoming out for good. I think we still live in a synchronized world, and as I mentioned in my last interaction, because the setup for the global markets and particularly the US markets is still so negative, I think India will have to feel the heat. And at the same time, we have our local problems. You know, suddenly in the last 4 or 6 weeks, there have been news flow that have helped the bears take the indices lower. I think from a near-term perspective, we did see a mini capitulation when the Nifty moved below the level of 10,000. So we are slightly oversold. This is not to say that we cannot recover. I think from a near-term perspective, there is a possibility of a little bit of a recovery. So 10,230 and best case 10,400 is what we are working with from a short-term perspective. And after the market completes this recovery move, you could see another leg down, you know, that takes the Nifty into that 9,800, 9,850 area. But I must say, at levels around 10,000, you know, I wouldn't be so bearish from a medium-term perspective, because while the index has just lost 10%, the mid-cap index has just lost about 12-13%. If you look at the broader markets, the damage has been far, far greater. You know, stocks have lost anywhere between 25 to 50%. So I do get the belief that a large part of the market bottomed out last week, but I cannot say that with confidence for the Nifty, for the Bank Nifty, or some of the other sectors in the market.
Okay. Good morning, Gautam. Good to have you with us. But, you know, if you have to make a guess as to how much more, as you say, you don't get a feeling that things have bottomed out. So is it what, a 5%? Is 9.7 a very good level that one can look forward for support?
Well, more than the local indices, I think we are tracking the global markets very closely, because as I said, I think it's really a global US market-led decline that India is witnessing, and even some of the other popular markets in the world. And our view is that the US market goes down to a level of 22,000 on the Dow, which is base case, and 2450 on the S&P 500. So that's a good 10% fall even from these levels. I had first presented my bearish view on the US, you know, a month and a half back, and that remains intact. So if that were to happen, you know, Indian markets after a little bit of outperformance also could lose another 5-6%. So 9,800, 9,850 is a threshold level which we are watching very closely, and I would want to believe that somewhere around those levels the market will turn a buy from a risk reward perspective. So I don't fall into the camp which believes that, you know, we are going to see a very big downside from here. As I said, the broader markets have seen a lot of pain. The setup is getting better, and post this 10% correction, I think the bull market is closer to starting the next leg up, which could take a few more weeks to come.
So if we do get this, say, 5 to 10% additional correction that you're talking about, Gautam, where do you see the opportunity now in terms of pockets, sector, stocks?
Well, near term, I spoke of a recovery, so you could see some more trading bounce in some of the popular sectors in the market, like technology and oil and gas. In fact, technology has done very well in the last 1.5 months and still has an excellent setup. So there, I think you are going to see relative strength continuously and consistently. I think oil and gas as a space has not done too badly. The BSE oil and gas index is around that level of 14,000. From there, we are looking at a trading bounce. But if you have to approach this market from a short perspective, I think the problem is still with the banks. PSU banks anyway have been hammered, and now many of the popular private sector banks, are breaking important support levels, and that has happened in the last few weeks. So I would like to believe that from somewhere around 24,700, you could see the Bank Nifty starting a reversal process, and it could actually go down and break levels of 23,500 and eventually move towards 23,000. So banks is the pain pocket in the market, and I think that's one space that is going to take the Nifty lower, along with, say, capital goods, which has seen a bit of a breakdown in the last couple of weeks.
And what would be a place to hide then, Gautam?
Well, it's pretty clear. I mean, just look at the relative strength. So it's IT. I think IT has done phenomenally well in the last 6 weeks. Not by going up, but just by staying sideways. So I think that in itself is a very positive sign, and it's almost a negative beta space at these levels. So I would definitely look at a lot of portfolio allocation in these challenging times in the IT space, and possibly FMCG, which hasn't done too badly in the recent past. Not to say that these are great setups and they will do well, but it's just that they might also remain sideways. Unfortunately, pharma, which had started to look good a month and a half back, has seen a false breakdown. So that does not speak well for the sector, and it's getting closer to its 2017 lows, where we would like to wait and watch and then take a call.
Okay, by the way, some stocks in the market are surging now. The mid-cap index actually picking up quite a bit. Just take a look at the intraday chart of Dilip Biltcon. That stock is now up almost 12% and has hit a new high. So Dilip Biltcon, big volumes, getting notched up there. Bank of America Merrill Lynch has initiated a buy on that stock with a price target of 1244. So it's still much higher than where the current market price is. And Britannia, by the way, has hit a new high today. Britannia has crossed that 5,000 mark, up about 1.5%. Gautam, you spoke about the trading bounce in technology and oil and gas stocks, but everyone's talking about consumption these days. We've seen the way Jubilant Foodworks has surged, Britannia hitting new highs. Is that a space that technically looks attractive now?
Well, unfortunately, you cannot talk of it as a space or as a sector, but then you have to really take a very stock-specific call in that space. I think my medium-term view there is still quite positive, but near-term, because of these challenging times, I don't think many of these stocks are going to see greater highs. Yes, they will not make lower lows, but at the same time, I think the move on the upside is going to be far more hard work. So I would definitely have them in my portfolio from a medium-term perspective, but short-term, I think there is no reason to trade into them aggressively.
Okay, well, actually, the markets are not holding highs. Whether you're looking at Nifty or whether you're looking at the mid-caps. The mid-caps at one point in time, pull up the index for you. See, look at the Nifty has completely moved off from that 10,170 level, and now is below that 10,150 threshold, which our tech gurus were watching very closely. And likewise for the mid-caps, it's kind of given up half the strength. Let's pull up the CNX mid-cap as well for you. And there it is, at one point almost rushing towards a 1% high, 0.7 at least it did touch. And now we are seeing that come off. Advanced declines are still 4 in the green, for 1 in the red. No worries on that count, but the Nifty Bank is losing strength very, very quickly. And leading that charge, of course, is ICICI Bank, down now 4.5%, Axis 2% down. And then, of course, mostly the PSU banks, which are lower. But it's not looking very good at all. Sensex now is almost getting into flat terrain. It's just about 0.6. Gautam, your take on crude, and therefore, the oil marketing companies, if you can speak about any sector at all?
Well, crude, I think, is pretty much in a very strong upward trajectory. I think we are looking at a target of about 74 on the NYMEX. And I think we could get there in a few weeks of time, and I think it's made a very strong base in that 58-60 zone. So there, I think we remain very positive. Whether that's going to be a major problem for equity markets or not is something that we'll have to wait and watch. But clearly, I think the trajectory is up. And on the other hand, the dollar index, which a lot of people talk about, the dollar index has seen a pretty sharp fall coming down to levels of 89.90. There we are seeing some indications of a possible bottom in that 87-88 area. So that's one dynamic that could, come into play in the next couple of weeks, and the equity markets will have to deal with that.
Okay.